Everybody. Welcome back. I thought I'd do another installment of my no-nonsense Forex building blocks. Just a little segments that help explain how I understand what VP is teaching all of us. This segment's going to talk about the C1 and the C2, which basically give us our trend and trade signals and confirms that. Now again, I want to remind everyone that to get the best education on this methodology, you really do need to go to nononsenseforex.com because VP is the originator of this method, and all kudos to him. I take no credit. I'm just trying to explain it as I see it. So in an earlier segment, we talked about the algorithm, which is the set of tools or the set of indicators that we put together in order to trade using the no-nonsense Forex method. And I already discussed the ATR, or the average to range, which is the indicator we use for our risk management to make sure that we're not overextending ourselves. And in this session, I'm going to be focusing on the C1 and the C2. Again, those are the two trend indicators. One is the signal and trend direction, and the other is a confirmation. So when we look at a chart, basically we're just looking at a historical pattern of price action, where price has gone. And people interpret these charts a lot of different ways. Some people look for support and resistance, other people look for trend lines, that type of thing, or for candle patterns or those types of things. That may work very well for some people, but it's really hard not using indicators to figure out is it going to go up from here or is it going to go down from here? So what we want to do is come up with a system that will help us to identify when's a good time to get in and which direction do we think it's going to go. So that brings us to the no-nonsense Forex algorithm C1 and C2. Now, again, the C1 is that actual signal to trade. It's confirming a direction, and it is giving us a signal to get in. And the C2 is a secondary backup confirmation. Now, VP talks about two different kinds of indicators that make the best C1 and C2. He talks about a 2-line cross indicator or a 0-line cross indicator. Now, they don't have to be these types of indicators, but that's where I would start since VP suggested it. So here's an example of a 2-line cross indicator. This is the absolute strength histogram, and this is just on default values. Now, because it's a histogram, it doesn't look so much like a 2-line cross, but if you ignore the bars, you can see there's a blue line and there's a red line. And when the red line is on top of the blue line, it is a sell signal. And when the blue line crosses over the red line, it's a buy signal. So this is one type of C1. The second type of C1 or C2 type of indicator is the 0-line cross, and this is an example of a 0-line cross. You can see this is the CCI, and I've got my dotted line right there on the 0 line. And this type of indicator gives us a signal whenever the line crosses up above or down below the line. So each time it would make a cross, Going up would be a buy signal, coming down would be sell, up buy, down sell, etc. And you might say, okay, well, this is interesting, but it doesn't look like it's really going to give us that great of results, and it may not. But what you really want to try to do is you really want to think about combining them. It's when you put these two together that, as VP likes to say, the magic happens. And what you're trying to do is you're trying to find a combination of two indicators that are really going to work and play nice together and complement each other. So you can play around with different indicators. Play around with making one the primary C1 and the other the C2, and then switch them and try vice versa. So if you were to look at this together, you can see now that you need both of them to be in alignment. So if the top one, if the absolute strength histogram is our C1 indicator, then we're going to look at that one first. We're going to say, okay, so here is a signal to go down, and yes, the CCI agrees. So that would have been a down. Here's a signal to go up, but at that point, the CCI did not agree, so we wouldn't have taken that. So that's how you work these in combination. And again, it's just a matter of trying to find what really works well and complements each other. Now, there are a lot of very, very sophisticated and involved ways to do your back testing. And I have to say that's probably the one thing I learned that really made the most impact on me through the whole no-nonsense Forex journey that I've been on. And I've made a couple of videos much more detailed and intensive on how to backtest. But when you're at this stage and you're just trying to find some indicators to use, I would say do a down and dirty, simple little win-loss tally. That way you can go through and you can quickly determine what is a viable indicator and what is not. So how you do that is you set up a time frame on the same pair, and then you start going through the combinations that you have, and you start tallying up wins, losses, etc. So let's take a look at what some of that might look like on a real chart. Okay, so here we have our price chart again. And I'm just going back to using these first two examples. This is our absolute strength histogram. This is our CCI. And again, these are all on default settings. So nothing fancy at this point. So how do we do this? So we're going to find a point in time, and whatever point in time it is, and you can go down by these numbers down here at the bottom, or you can set up a vertical line however you want to do it. But what you're going to do is you're just going to go along and see how they work out. Well, let me get that to stop jumping on us here. So if we start here and we say, okay, here's a signal down, right? Here's a signal down. So our C1 is saying go, and our C2 is in agreement. And how we can really be sure, sometimes it's hard to see, is you look over here at our data window. Okay, so where was I? Was it this one? I don't remember now. Okay, so that would have been an indication to sell, and that one would have worked out. So let's go over here to the next one. This is a buy signal, but if you look, we can't take it because our C2, our CCI, is not in agreement. That's still below zero, so we don't take that one. Let's go along to our next signal. There's our signal. Our CCI agrees, so we take that one. And that one does work out. turns right away, but it does work out. So this is what you do. Work through your combinations, and for each signal that your C1 gives you, um, and if it's valid with your C2, then mark it up as a win or a loss, and try different combinations. Some other examples of C1 and C2 type indicators. This top one is Supertrend. Supertrend is an indicator that I used in my first algorithm. If you've been following me for a while, you know that a year ago, back in January, I first started this endeavor. Or if you're just starting, you may see some older videos. But this was my first C1 indicator that I used. Now, I don't know if this was a two-line cross or a zero-line cross, but this is another type of indicator that you can use if you need to. It's more of an on-the-chart visual type indicator. So this one, I liked it for my C1 because it's fairly easy to read. I mean, this is all indicating up or buy, and then as soon as it switches over, then that's your indication to sell. And you can see how it kind of goes back and forth a little bit there. Now, another indicator that I like quite a bit, and I use it sometimes as a C2. Lately, I've actually been using it as a what do you call it? A exit indicator, and I'll use it, to help me get out of a trade. But we're not here to talk about exits yet. But this is a QQE, and rather than being a zero cross, it's actually a 50 or a midline cross. It's the same type of thing, that when it crosses below the line, it's a sell signal, or it's a confirmation signal. So let's just take a look at these examples and see how they work together. Okay, so this right here, you can see it just turned from red to blue, but our QQE did not confirm, so we could not take any of that signal. Here is a sell signal. QQE did confirm. Unfortunately, though, stop jumping. Sorry about that. Unfortunately, though, that one didn't quite make it. Okay, so here again, we've got a buy, and it's confirmed, and that would have been good. So that's how you do it. You just work the two together. And again, tally up wins and losses until you find two that really work well and you like them and they're comfortable for you to read. And then you go from there. Now, we've only been talking about default settings. The fun really begins when you start playing around with the indicator inputs. So here's our absolute strength down here indicator that we've been using. If you go up to charts and you click indicator lists, it'll show you the indicators that you have on your current chart. Now this one, I only have two indicators so far. I have my no-nonsense ATR, and I have my absolute strength histogram. Okay, so this example, I've already been playing around with the levels a little bit. Now, if you remember, to start with, the default values was a length of 9 and a smoothing factor of 1. So if you see, this is what the default values looked like. They're a little jumpy. So what do? You open up your indicator and you say, okay, let's smooth it out a little. Let's try smoothing factor of 3. And you just trial and error, and you say, okay, well, this is looking a little better. Maybe it's less jaggedy. Let's see what else we can do. So we open our indicator. We go to our inputs. This time, let's go up to like 15 on our length. And then watch this down here. See? It's now we don't have as many back and forths. So this is the type of thing that you will do with both of your C1 and C2 indicators until you get that sweet spot where it works really well for you. So there you have it. That's really all I have for you in this segment. I hope it was helpful. I hope you're enjoying these little no-nonsense building blocks. And really good luck with your training, your trading. I guess I'll see you at the next one. Take care.